SRM Institute of Science and Technology, Engineering, Medical and Health Sciences, Management, Dental, Science and Humanities, Law, Agriculture Sciences, Hotel Management. Admissions open.
When you live in a fast-moving, ever-changing world, life brings forth unlimited possibilities. Yours to explore, excite, enjoy, educate, evaluate, and elucidate with elan. Never stop moving forward with Darwin Platform Group. Darwin Platform Group, the visionaries.
ThyroCare, the trust, the truth.
With that, we move on to our next panel discussion on new age CEOs and pandemic challenges. Almost every business has had to revamp strategies and build new business models during the pandemic. However, most such enterprises have faced problems before. Our next panel is with young entrepreneurs who are possibly facing the first really big problem of their career with the COVID outbreak. The next session is on new age CEOs and pandemic challenges. What are the big lessons they have learned in the last 10 months? Joining us for this panel is Mr. Nikhil Kamath, founder and CIO of Zerodha, Mr. Sagar Daryani, co-founder of Wow Momo Foods, and Vikram Chopra, co-founder and CEO Cars24, to discuss how they tried to turn around their businesses when at one point their revenues were almost zero.
Welcome to this Business Today Mind Rush panel discussion on new age CEOs and pandemic challenges. So it will be good to start off by hearing from you for maybe a couple of minutes each to try and understand what is it that were the biggest challenges that you faced, one within your organization, and then in any of the invested companies that you have invested in. So Nikhil, you would like to start?
Hi, Rajiv. So when the pandemic started, we're in the stockbroking fintech space. The biggest worry at the beginning is how the markets will react. Markets became fairly erratic, chaotic at the very beginning, and we saw a steep correction. The focus shifted upon how much further the correction might go and how much wealth destruction it might cause in our retail investor base. This was soon transitioned by figuring out how to get people to work from home and how will we work as a broker if they can't come into the office. So we attempted to stimulate it about 2 weeks before the lockdown. So we had our staff working from home, and we had internet and the basic infra one might require set up for everybody. What we've realized surprisingly today is post the whole lockdown thing, and now we're in January, and in many ways people on the streets are acting like the pandemic is behind us. We figured that working from home and people going back to their native towns is actually a very efficient mechanism for a broker. We do 3 different tasks which take up a majority of the workforce. The tech team needs to be available in person because they need to be creative, collaborate, and put out new product. But for everybody in sales, account opening, technical support, wherein the job is very repetitive, we figured that they're doing a better job at home, they have more times with their family, and we're at that point today wherein I don't think we will ever have them come back to the office. We'll have an office which will allow for 25% of the workforce to come in when they like. But outside of that, I think this new normal has actually shown us something we might not have attempted on our own.
For us, I think the coronavirus lockdown when happened, fortunately or unfortunately, we have had like several mock drills. In 2016, we had demonetization, which hurt auto industry badly, specifically used cars. Then we had the whole GST migration, which hurt our business again, because initially there was higher significantly high GST on used cars. Then we had this whole NBFC crisis that put the whole new car industry into a tailspin. And then the whole BS6 migration, which increased the prices of the car with mandatory insurance. So I think we have had several crisis situations. So I think at some level it helped us prepare for another crisis. But of course, this was at another level because specifically for our business, it literally just went down to zero, right? Because with lockdown, you cannot transact cars anymore. And we are a very execution intensive business. So while we are a tech driven company, pretty much like any e-commerce player, but on the back end you have a lot of humans which help do these car transactions end to end. And now we have like a workforce of 3,000 plus with zero revenues and with no sight when will this get over, right? And then we looked at some past data and we worried if there is a recession, then this may take maybe 2 years or more for cars as a business to recover. So that was a very tough one for us. The logic said we should let go of people. The heart said that you cannot leave hands of people as soon a problem arises, because then what do you really stand for? In this battle this time we followed heart over head and we did not ask anybody to leave, with no clarity on how long will this go and how long we will continue to bleed. And we did bleed quite a lot of money. But fortunately, as soon as the lockdown ended, our numbers started coming up. And now we are at 50% higher revenues in December.
We began Wow Momo in 2008. It's been 11 and a half years, bootstrap, plowed back profits. And suddenly comes April 2020, the first month where we see losses in our books. A loss of 6 crores, business comes down to 1/10 of what it was. So, we were averaging around 20 crores a month. And in the month of April, we were less than 2 crores. Out of our 343 stores, I think only 50 plus were operational, and that too for delivery. So it was tough. It was a new world. It was definitely a new now. And 3,000 employees, right? So the first thing comes in that, we have a huge staff strength, because we're a people's business. It's by the people, for the people. So 3,000 people, how do you pay them salaries? What do you do? But, like Vikram said, it has to be heart overhead. I mean, today as an organization, what you do today is what you stand for times to come. So we were very clear. I think as a leader, it's very important to be transparent with your entire team. So, we were very transparent with them right in the beginning. We assured them that there will be no job cuts for the next 4 to 6 months. We paid them the entire salary for March and April. And we were very clear with them that, we will have to take pay cuts from June onwards, from May, June onwards. And we did that. The entire workforce was down to 70% from 100% pay cut. And what the pandemic did, to be very honest, it was very scary. Imagine your revenues are down to 1/10 of what it was. You have so many costs to bear. You have fixed rentals to bear. But what it did is, I always believe that, adversity calls for diversity. Adverse time calls for being diverse. It calls for being reinventing yourself. It calls for being agile. And I think that's what the startup word is all about. It's all about being agile. It's all about adaptability. And I think what we did, to be honest, for us, now I feel, when I look down 6 months from now, 9 months from now, I think this entire pandemic has, in a way, been a blessing in disguise, because I think it's how you convert challenges into opportunity. How do you convert tough times into opportunity? And I think we've at Wow Momo have been able to do that very successfully by God's grace. The business is now back to 80% of pre-COVID numbers, if I have to compare like to like. 270 stores are operational. We've opened 40 more new stores. We've shut down 30, 40 stores. We've gone linear. But for the first time in December 2020, we were back to profits in this financial year. So yeah, all's well that ends well.
Some of you are also investors in companies. What is the specific startup challenge that you think some of those organizations could have were facing? Because it's a very fragile ecosystem, especially when the startups are young and they haven't had many rounds of funding. So any specific challenges that your investee companies faced?
So yeah, I'll take this up to begin with, if it's okay. Yeah. So basically, there's this company called Rare Planet where I've invested, and they are more into travel, travel gifting in a way. So, they have their outlets inside WH Smith, they have shop and shop formats inside a Relay, etc. And they are into sculptures and they are into, handicrafts, etc., etc. Now, for them, it was a very big network of shop and shop formats across airports, across railway stations. And suddenly, with the pandemic, travel stopped. And they were doing really well. They were invested and they had an online presence, but it was not very strong. I think what it has done, it has made many businesses, take up technology more seriously. Not just look at e-commerce as an omni-channel, but in many cases look at it as the primary channel. Another challenge that I saw in a couple of companies where I've invested is that a lot of us, and I personally also encourage it, is that debt is always cheaper than equity. With equity you tend to lose a bit of your stakes, but with debt, you can really use the debt in the right manner and grow your business. Now, in many of the businesses, many of the startups, what I felt is that they were funded by NBFCs, because NBFCs are the guys who come and give loss-making startups also who are scaling at a very high pace debt. However, the government of India, extended the moratorium to banks, but not to startups. So I think refinancing of debt became another new thing, a new point, and we were able to guide ourselves as well as many other startups as to how we can refinance the debt. Because if you're not getting the moratorium and if you're not getting your interest waivers or whatever it is for those periods where the revenue is almost close to significantly low, is how do you combat those challenges?
Okay, Nikhil, any of your investee companies? What was the experience like? What was the flavor like?
We're fairly focused on the fintech space, all the investments we make.
Okay.
And everything stock market related has, just skyrocketed. Now it's gotten to a point where even we don't really understand why the markets are going up so much. So it's a bit scary. And but everything is done well, yeah. Everything in fintech.
Okay.
Everything from asset management, if you're an option trading platform, if you're a charting service or an order matching engine, all the kind of investments we do, not just our investment companies, but everybody in the ecosystem, everybody's doing well right now.
Vikram, your thoughts on your investee companies and how did they deal with the challenges?
No, I have all eggs in one basket, which is Cash24.
Okay.
So I think for us, I think given we are fairly operational intensive, our focus was extensively on automation, on improving our processes to further improve our customer experience whenever we are back.
Well, what was your experience of customer acceleration, acceptance, and this thing as far as technology is concerned?
So before lockdown in February, and in July over February, our traffic went up by almost 5 times.
Wow.
And this is when we were not doing any marketing. Otherwise we are very heavy on television. But obviously with the lockdown, we stopped all sorts of marketing and did not restart it until November. But in July itself, our traffic went up by almost 5 times over what it used to be before in February, and it has sustained. So this is all organic traffic, consumers coming by themselves. So clearly there has been a dramatic shift in consumers' own choices where they want to start their experience of buying, selling. They preferably want to do it online first, as opposed to doing it in the unorganized market. So we have clearly benefited from that, and which is why I think our transactions are also up 50% over what they used to be before the lockdown, and without any incremental marketing investments. If anything, it has been much lower than what it used to be.
Nikhil, you've also seen similar spike?
Yeah, I think we've seen about 100% the last 6 months. Maybe we've added about 1 million plus clients. A lot of them have luckily made money this time. So like Sagar, retail historically has not made a lot of money in the equity markets. But this is the first cycle where I see it to be different. People have come in at 9,000, 10,000 Nifty and they've made money. So if it manages to change the narrative around equity investments being risky and stuff like that, I think the pandemic will have long-term beneficial implications for equity investing.
Okay, Sagar, what was your experience like? Tech acceleration.
So I'll tell you what, for us, the home delivery business was always at a 25% and it was 75% retail business, impulse buy and people, a planned approach, right? What the lockdown did, what COVID did was that, our delivery business really shot up. and till now we were only delivering through a Swiggy, Zomato. So we invested heavily on our own tech. We said we don't need to have our own app, but we integrated with WhatsApp through this channel called DotPay, and we enabled our consumers to directly order to us through DotPay, and that worked significantly well for us, because it was us owning the customers and us interacting with the customers, and we tied up with third-party logistical partners like a Delivery, Dunzo, Shadowfax. So, in a way, it enabled us to create our own medium of delivering. And although Swiggy and Zomato helps you to be discoverable, but what the lockdown has done is that our high street stores are back to a 75% to even 130% in some cases. Some of the high street stores, because of the shoot up in delivery, is doing much better than before. It's the malls where we are struggling, to be honest, because for us, the malls were cash cows earlier, because malls drawing a lot of footfall. People come and do a planned approach to a mall. They catch on to a movie, they shop, they eat. It's like a destination, right? We are there in more than 100 plus malls. The malls are anything at a 40 to 60%. So we are struggling there.
What has changed permanently for you in your organizations? If you can give us a sense of what is it that you have rethought and will never be the same again?
I think the fact that people will not come back to the office is drastic for us, as much as 70% of our staff will continue to work from their native places or their homes in Bangalore. I think that is significantly different. Outside of that, I think the very outlook of how we look at HR is changing. The one thing we've realized is during the pandemic, a lot of the staff has put on, a significant amount of weight, for example. This might not sound like a big thing, but I think it has deep implications for a company to monitor the health of the staff of the company. So right now we are focusing on things like, having competitions for them with prizes as to who loses the most weight, who gets fitter in the fastest amount of time. Outside of this, I think people are lonely, and emotionally and mentally, everybody is a lot more stressed because the social activities one had pre-pandemic no longer exist. So we are really paying attention to the economy, to the emotional and the physical attributes of our staff, and figuring out how we can help them.
Okay, Vikram, what has changed for good or for bad? What has changed completely? What has the pandemic changed totally?
I think there are goods to be taken, at least for us. We have the whole process of buying and selling a car is something where people have generally believed that they need to be involved, in the sense they need to meet somebody physically. I think that has definitely taken a step change where people are now willing to buy cars online. So from us before pandemic thinking that, we need to have physical setup where a customer can come and physically see a car before they can buy, to the point where we are making it now 100% online experience, right? Pretty much like you order something from Amazon. So I think that's a very dramatic shift that we have taken.
One thing that's definitely going to change is we all in the organization are going to save a lot of time with travel, because we would earlier travel a lot to do physical meetings, physical reviews, which is now happening very efficiently through Zoom. So that's been a new learning, a new adaptation. So it's going to help you in saving cost and travel time. However, we've always been a very hands-on, people-facing business, because when you're in the hospitality and the food business, it's completely a people-facing business. So for us, work from home is not really something which really works in the literal sense. I think our entire staff force is back to the field, whether it's offices, whether it's the outlets and operations, except for a couple, who are maybe keeping a bit unwell, and we want them to be at home and take care. But to be very honest, work from home, the new normal is something that, I would not encourage a lot, because for us, we having so many outlets in tech parks, having so many outlets in multiple locations which have a mall and an office building attached to it, it does take an impact on your revenue. However, I think, you have to adapt with time, and you have to tweak your businesses with time. I think what we've done is that, we've tried to look beyond what we were earlier doing. We had a second brand that we launched called Wow China. I've always been a very big fan of the retail and the QSR business, but I've not been a very big fan of cloud kitchens, or the ghost kitchens, as you might call it, because I personally feel you can't make money from that model. However, we're trying to create a model which is very hybrid between where you convert your retail stores into multiple brands. So we are about to launch our third brand, which will be operating from all Wow Momo stores without occupying any additional cost, with the same manpower, but having more visibility on the app. So you tend to create a business of brands by giving more variety to the consumer.
On your thought on how small towns, especially second tier 2 and tier 3 towns, saw greater traction in this phase. If I may bring in Nikhil and Vikram also, did you have similar experiences? What was it like geographically from one place to another, metros versus smaller cities? Nikhil?
In terms of penetration, the biggest centers continue to remain Mumbai, Hyderabad, Bangalore, Delhi. But we're seeing a lot more traction from tier 2 and 3 towns in the younger age category, which is a bit weird. So some of the big changes that have happened demographically during the lockdown is the average age of an investor has gone down from 33 to about 30. The amount of female participation in equity markets in India has stayed at about 15-16%. That number is not going up. And we see a lot more younger people coming in from tier 2, tier 3 towns. If this is by factor of them having relocated during the lockdown, or is it just that there is more interest in tier 2 towns, or is it because of a higher level of unemployment, is very hard to gauge. But there is more activity in tier 2, tier 3 towns now.
Oh, very interesting. Vikram, you're also seeing similar changes?
Not at an overall level. I think from our penetration wise, I think cities are or the different geographies are where they used to be. However, the recovery was faster in smaller towns and cities. And I think that was perhaps to do with the fact that there were still more stringent lockdowns in parts of bigger cities, and they were badly hit. But I think as of now, with sort of the numbers going down quite sharply, we are seeing that almost all cities have grown equally or almost equal proportion.
As we come to the end of this, my last question to each of you is about the big lessons. Maybe if you can, highlight maybe 2 or 3 big lessons from this whole journey of the last 8-9 months. Nikhil, would you like to start?
Sure. So I think the biggest lesson for us, which we've always maintained, is not to pile on too much debt. Economies often surprise you. Companies, in their own life cycle, everything is cyclical. Every company has a up and it will have a down. I think to not stay too levered is extremely important, because when the down happens, this leverage and debt really eats into your balance sheet very quickly and may not allow for you to survive up until the next cycle. To not be levered, I think, is the biggest lesson from the pandemic.
Very interesting. Sagar?
I think one thing that we've learned is that when you are in profits, you tend to have a larger team in place because you're expanding also at a very vast scale, right? So what happens is that when you are growing very heavily and very fast in the top line, the bottom line might get compromised to an extent, although because you are in profits, you are comfortable, right? What happened to us was that when we started seeing losses for the first time, we actually dig down deep to ensure how can we do our cost controls, how can we go more linear. And I think that's only helped and worked for the business, because even going forward, we feel we can do the same kind of numbers by even going linear, by multitasking. When one task can be done by one person, why do you have 2 people for it? So I think going linear has been one of the major learnings, which will obviously help us in cost control going forward.
The biggest learning has been that this crisis has actually brought the team closer to each other, and I think it's made us. My co-founders also reflect on like how good a job we are doing of our people policies and how do we sort of behave and treat our people. And I think those 2 months where it was everything was shut down, we came very close to listening to so many stories of people wondering whether we may be asked to leave next month. If they are, then how do they sort of continue with their livelihood? On the other hand, if lockdown is open and if they have to go out and work, then how do we ensure that they do not contract the virus? If they do, who takes care of their family if they get very ill? I think these are all very tough questions that were put to us, and with no easy answers, and actually no definite answers. I think it just made us more empathetic towards how people feel. To give you an example, like many companies, we have a lot of policies, but and for a long time we have been very stringent on those policies with an argument that if you make one exception, then you have to make hundreds of exceptions and so on. But I think now we are able to look at it from the other lens, right? These policies are for people, and if you cannot or modify or adapt them to the people, then it loses its purpose.
So many lessons and so many learnings from this. The big thing is that it has actually grown business for a lot of communities and businesses which have been in the tech space particularly, and have managed to leverage this situation to their advantage. So with that, let me thank you all panelists, Sagar, Vikram, and Nikhil. Thank you for your time.
When you live in a fast-moving, ever-changing world, life brings forth unlimited possibilities. Yours to explore, excite, enjoy, educate, evaluate, and elucidate with Elan. Never stop moving forward with Darwin Platform Group. Darwin Platform Group, the visionaries.
We have a special message from Mr. Ajay Singh, Chairman and Managing Director of Darwin Platform Group of Companies. Let's listen in.
Darwin Platform Group of Companies was established in 1996. It's one of the fastest growing business houses of India with a global presence. Darwin Platform Group of Companies is a debt-free with over rupees 41,000 crore net worth and 24 business companies which operates in 11 countries. The group operates in sectors like healthcare, defense, finance, banking, agriculture, mining, logistics, airlines, avionics, shipping, realty, infrastructure, information technology, and education. In the pursuit of nation building, we accord top priority to innovative business models, sustainable, green, and eco-friendly business ventures. When the going gets tough, and the tough gets going, and that's what the Darwin family is all about. During the pandemics, as the saying goes, we as family took care of each other, constantly motivated and kept the spirits up. Every medical emergencies were taken care by the organization. For the year 2021, our focus will be retail, FMCG, pharmaceuticals, petroleum, banking, airlines, manufacturing of electrical cars, and expanding our taxi business all over India.
When you live in a fast-moving, ever-changing world, life brings forth unlimited possibilities. Yours to explore, excite, enjoy, educate, evaluate, and elucidate with Elan. Never stop moving forward with Darwin Platform Group. Darwin Platform Group, the visionaries.
So I listen to music or do a walk. Actually, taking a walk is the best thing to unwind. Taking a slow walk. Physical exercise at least 4 to 5 times a week, including yoga or a walk, jog, or sometimes some gym, which is, resistance and weight. So some form of exercise at least 4 to 5 times a week.